So you started?
Hey man, yeah, I was just gonna wait for a couple of guys to jump in. They said there'll be a minute, and there's no point starting now.
Of
We
course.
just got 5 guys, so we'll just get a couple more minutes.
Of course.
Okay, let's just go ahead. I'm sure some guys will join in a second. Plus, I'm live streaming it, so even if people do miss the AMA, they're going to get a chance to watch it afterwards anyway. So, Max, thanks for having us on. Thanks for coming on the show. Why don't you explain to us a little bit about overnight finance and USD Plus for those of you guys who are quite new into this server and don't really know that much about it?
Yeah, so USD Plus, so overnight is essentially an asset management protocol. We have 2 major kind of product lines. One is USD Plus. USD Plus is essentially USDC, which pays a yield. You can mint and redeem USD Plus one-to-one to USDC. So you keep USD Plus. It's going to pay you yield once a day in your wallet or wherever you put it. So just the balance of your USD Plus will grow every day via rebase, as I said, in your wallet or something like this. Typical yields are between 7 and 12%, depending on the chain. We're on Polygon, Optimism, Binance, and Avalanche. Highest yields these days are on Optimism. USD Plus is performing really well over there. What else? When you mint USD Plus with USDC, that USDC goes into collateral. Each USD Plus is always collateralized at least with 1 USDC or more. And that USDC is invested into a number of super safe, lowest possible risk stablecoin strategies across various DeFi protocols. By stablecoin strategies, I mean, we would invest into things like USDC, USDT, on Curve, or USDC, USDT, DAI on Synapse, stuff like that. So it's really the lowest possible risk that only exists in DeFi. And so the yield from those strategies will be passed over to you in the form of rebase. And also when you want to withdraw your USD Plus, so you want to redeem it for USDC, the smart contracts of USD Plus will just go into the strategy, withdraw the cash, and give you back your USDC. So instantly, any amount of money you can mint, you can take million USDC and mint million USD Plus with zero slippage. And the other way around, at any point in time, you can withdraw 1 million USD C from your USD Plus, again with no slippage. There is a small fee for base points, but that's essentially it. So that's our first product line. I mean, you can call it kind of traditional finance. You would call it money market fund. So its destination is really like liquidity treasury management for individuals and project treasuries. So it's something which is super safe, lowest possible risk, but also the returns are not super high. Another set of products is called ETS, Exchange Traded Strategies. It's medium risk. These are medium risk products. By the way, there is one new which we released just 1 hour ago, ETS on Vmatic USDC on UniV3 on Polygon. That's like really amazing. There is space, rush for that. I would rush for that. But so those strategies, are delta neutral. So, for example, typically you see that stable-to-stable pools give very little APY, but stable-to-crypto pools like ETH USDC, for example, or ETH USD Plus, will give much higher APY. So what those ETS strategies do, you mint it for USDC or USD Plus, or you put USD Plus into it. It's used as collateral on Aave to borrow ETH, and then to farm ETH USDC pool or ETH USD Plus pool. So this way, it's actually very interesting. It becomes very, very interesting because you kind of get your stablecoin yield, because when you borrow ETH and then you farm with ETH, you have no ETH exposure. All ETH you own is actually in the LP is actually hedged because you borrowed it. And so you kind of exposed, you kind of have a stablecoin product which actually gives you yield like crypto to stable LP. So if USD Plus kind of yields 7 to 10 to 12%, this product yields 15, 20, 25%. So this is like really a different ballpark in terms of the yield. It's slightly higher risk, but significantly better yield. So this is what Overnight is doing, managing money, managing assets for stablecoin investors who are very conservative and risk conscious, and who want their yield in stable coins by doing nothing. And literally, that's how all of our products work. You invest and then you do nothing. You get your rewards in stables, they auto compound it for you. You get it via rebase. You literally do nothing. You just watch your balance grow.
Okay, man, nice. So I've got like a bunch of questions that I wanted to ask you on pretty much all of your products, a few on USD Plus, and then I also want to focus on your new products, ETS, and you guys have also got a token generation event coming up as well, right? If I'm not mistaken. In the near future.
Yes, we're thinking about something about end of November for the token generation event, but we have not yet. We'll be confirming the timing kind of at the end of the first week of November.
Okay, well, I've got a few questions on each of them anyway, so we'll backtrack to USD Plus. And you give us a nice explanation there of exactly how USD Plus works and functions. However, for those guys who maybe they don't have so much experience in DeFi, but maybe they heard about the Terra Luna crash and how UST, which was an algorithmic stablecoin, managed to lose its peg. Can you explain to people in layman's terms the difference between USD Plus and an algorithmic stablecoin like UST?
Yeah, I think we get a lot of this question. USD Plus, exactly, and the same as USDC, the same as DAI, the same as USDT, are so-called collateralized stablecoins. And so what it means that there are real assets behind those stablecoins. And, if they depeg, there is a mechanism to get back to the peg. Because there is real value. So once you suddenly see that something is like, for example, we run our arbitrage bots on USD Plus. Whenever we see it's depegging up or down, our arbitrage bots will just kind of imagine USD Plus becomes 101. Then immediately our arbitrage bots will take USDC, mint USD Plus, sell it at 101 for USDC, and kind of realize 1% of the profit. So, USD Plus will be back to its peg. So, why that's possible? Because there is real assets behind USD Plus, which can immediately be converted into USDC, thus creating a profitable arbitrage opportunity one way or the other if it starts depegging up or down. In case of UST, that was an algorithmic stablecoin. It didn't have collateral. It relied on an algorithm to maintain its peg, and that algorithm was not universal. So there were many scenarios under which UST could depeg. And in particular, when you issue too much of it and you pay too much yield, at some point in time, your liabilities exceed your asset, and you end up kind of depegging and losing money and not being able to pay back. So essentially, most of the algorithmic stablecoins, including the seniorage ones like UST, have no collateral, have no asset behind it. They take people's money and waste it to maintain the peg for the short term. Then they run out of this money, and the peg is lost. And the money is lost, everything is lost for the people because there is no collateral. And in case of USD Plus, you always have collateral.
Yep. So I guess that's the main difference that people need to understand. You guys, everything is collateralized by stable coins, such as BUSD, USDC, and you guys are actually very transparent with all this. And if you go onto your decentralized app, you can see where all the money's invested, right? You can see exactly how much of each that you're holding and where that stuff's being invested. But
it's not only you can see, there is also a link to debank, to the contract. So each strategy which we have is a separate smart contract. And so address of that smart contract is in the link. You click on it and you can audit via debank the real position which we've got. So you audit it and you can literally see that the money is there and how much money is there.
Yeah, and just the last question I got on USD Plus. So considering you guys are putting the money into investments, what would happen, say, one of the protocols where you guys have got money got exploited? How would that affect USD Plus?
Yeah, if there was a loss in one of those protocols, then we would be exposed. We would lose money, and there would be negative rebase. This hasn't happened for more than a year that we've been running this. We're extremely careful about which protocols we get exposure to. Not only we check if there is audit, we actually audit ourselves for smart contract risks. We do read other people's code before investing. We check if contracts are verified. We check if there are any external accounts. We check if there are multi-sigs in place for the protocols which we invest into, if there are time locks in place for the protocols we invest into, and stuff like that. So, I mean, anyone in DeFi can be exposed and can be vulnerable and can lose money to smart contract risk, what you are referring to. But we do, because we manage other people's money at pretty significant amount. of other people's money. We actually do have resources and had to build competence and expertise to do professional due diligence. And that's actually very, very important for us. And that's one of the values which we are providing, kind of giving people an opportunity kind of to get the benefit of this due diligence by investing into USD Plus, via USD Plus.
Yeah, for sure. And just lastly, like another one of the use cases for USD Plus is projects using USD Plus and using it to provide liquidity for the project. Do you want to touch on that a little bit? On the advantages to using USD Plus compared to using a native token, which, for example, this year most of them have lost 90% in value and have really damaged a lot of protocols. And also then the advantage of using USD Plus compared to then pairing your token with BUSD or USDC or something like that.
Yeah, absolutely. And thank you for asking this question. So indeed, kind of the magic power of USD Plus is its ability to pay yield in pools. So if you invest into a liquidity pair like USDC, USDT on any DEX, what you get fees and rewards, which together constitute your yield. On a pair with USD Plus, you get fees, rewards, and yield from USD Plus, because we know how to pass over the rebase to you when you LP in a DEX. There is a whole list of pools where you can kind of LP where USD Plus is present. But like the key premise is the following: with USD Plus, like with USDC or USDT, you get fees and rewards. With USD Plus, you get fees, rewards, and yield. And it's like this same fees and rewards as without USD Plus and yield on top. So you get like infinitely more than zero, like I like to say, because you used to get no yield. Now you get all the same you used to get and yield on top, which is much more capital efficient. So that is the key premise, and so a lot of projects kind of have to provide their own liquidity on the DEXs because like nobody wants to put money into their governance tokens, but for some reason they need to have liquidity in the DEX. For example, there is a big game called AutoClam. On Polygon, they chose to switch Clam USDC to Clam USD Plus. Because all the liquidity in the DEX was theirs, was their own kind of treasury liquidity. They realized they had to put a lot of USDC on the DEX. It was not generating any yield. They had to keep it there, but it was kind of dead capital, which was not producing returns. They replaced it with USD Plus. So now it's Clam USD Plus, and suddenly they're getting additional yield on pretty much, on quite a lot of liquidity. They were keeping over there like 300,000 or something like this. And so getting kind of 10% on 300,000 makes quite a difference over 1 year or like over any time. So that's number one. Number two is they also realized that the way liquidity pools work is left side of the pool always equal in value to the right side of the pool. So if USD Plus grows in value in that pool, so there was like 1,000 USD Plus and became 1,001, then 1,002, then 1,003, all because of the yield. That actually automatically puts appreciation pressure on the left side of the pool. And speaking in play terms, what that means that Clam token is appreciating every day by the amount of the USD Plus APY, so by the amount of rebase. So imagine there was like 1,000 Clam tokens against 1,000 USD Plus. So 1,000 Clam was worth one USD Plus. Then USD Plus rebased. It became 1,000 tokens of Clam, 1,001 USD Plus. And so suddenly one Clam is worth not $1, it's worth $1.001. And that is happening every day. So I think we realized that, in crypto winter, you got to go for all sorts of buying pressure. And having USD Plus in the pool provide this appreciation pressure on Clam was very, very, very valuable in these times.
Yeah, so it's been nice to see some projects adopting it, and I'm pretty sure, as time goes on, it's only been more and more projects realize the advantage of using USD Plus for providing liquidity. So we'll move on to the newer products now, the ETSs. Now, I know you went over and explained in a bit of detail, but can you give us kind of a list of the advantages to using an ETS compared to yield farming normally?
Yield farming normally is like your own strategy, how you want to farm it. And if you are conscious of the impermanent loss, or like if you are conscious, then you probably kind of farm stables. If you are conscious of kind of crypto volatility, you probably avoid crypto to stable liquidity pools because they expose you to the crypto, prices going up and down. But usually kind of on stables these days, if you can get like 7-8%, that's pretty good. But on something like ETH USDC, you get something like in the range of 20%. But you get IL, and you probably get like all this crypto volatility as well. And so what ETS does is it actually hedges your crypto volatility exposure. So imagine you have ETH USDC pool, which is yielding 20%. You want that 20%, but you're afraid that ETH will fall. So what you do, you invest into ETS based on ETH USDC. You put in USDC that's used as collateral on Aave to borrow ETH and then to yield farm ETH USDC. So this way, if price of ETH goes down, then the value of your debt, so the loan you took out from Aave in ETH also goes down. And so one effect neutralizes the other. And so this way you kind of stay neutral, and so you stay stable. Essentially get stablecoin yield regardless. And so that's the essence of the delta neutral strategies, like, farm crypto to stable pairs, but hedge crypto. And once crypto is hedged, you're not getting like 5, 6, 7%, which people are getting used to these days on their stables. Suddenly they get 15, and that's much more interesting. The new product which we are launching today is like V3 of ETS, so third version of ETS. Previously, we would always yield farm ETH USDC or Vmatic USDC or Bitcoin USDC. We would farm it on traditional DEXs, kind of various versions of Uniswap V2, and that was one type of pools we were farming. These days, a lot of liquidity is migrating toward concentrated liquidity on Uniswap V3, and that is way more sophisticated DEX. It's actually for professional traders rather than for kind of, I would say, passive liquidity providers. But at the same time, yields can be much more attractive. So we are launching this ETS, which underneath is mining liquidity on, concentrated liquidity on Uni V3. So the same ETH USDC or Vmatic USDC, it will borrow ETH and kind of, liquidity mine ETH USDC on Uni V3. Or will borrow Vmatic and kind of liquidity mine Vmatic USDC. So that's really the new product, and we like it for two reasons. Typically, on a Uni V2 type of DEX, rewards play a very big role, and they're a very big source of yield. So when rewards go down, yield goes down, and the product can very quickly, in bear market, much quicker than we all hope, loses its attractiveness, loses its yield. On Uni V3, there are no rewards. So there's kind of natural yield. All the yield comes from fees, from trading. So Uni V3 is independent of the rewards. So it's a way more sustainable source of yield. And with that product, you don't need to run, between different pools, trying to make sure where the yield and rewards are the highest. With Uni V3, you just know it's going to be there for a long time. It's going to generate fees, And by the way, the yield on UniV3, if you do things smartly, on average, the fee levels, so the yield, average yield from those pools, is higher than on UniV2 and traditional kind of UniV2 types of pools. So I have to tell you that ETS, which we are launching today, we've been testing for over the last 3 weeks. It's been, producing average of 200% of returns, 200% without rewards, APY. So annualized yield. That's like really too much. As this product scales, we are sure it will go down, but we believe that's going to be like the most lucrative ETS we've ever done.
Okay, nice. Yeah.
We have put a cap on it. We don't yet know how the product. Yeah. Go ahead, Jen.
Oh, sorry. So your mic cut out, and I thought that you'd finished talking, but go ahead, finish.
Yeah. So we had to limit the participation of the TTS. It's still in the testing phase, in beta testing phase. We limit the participation because we want to see how the product performs at scale when people put in hundreds of thousands or millions into it. So for the time being, we limit the maximum cap to 100,000. We see how it performs there. If the yields are good, then we increase the cap to 200, 500, 1 million, 2 million. But in the meantime, we want to go up slowly. So in the meantime, for the foreseeable future, that product is going to be capped and limited to pretty low TVL. So, but it's been yielding 214% APY, 214% APY without rewards. I mean, that's mind blowing. So even if it loses, even if the yield goes down by X10, it's still really cool product. I mean, so can't wait to see how it works out.
Yeah. So just before I ask the next question, if any of you guys do have any questions, either type in the Discord channel, the main general chat, or you can just ask a question on the live stream on YouTube, and we will answer them afterwards. So one aspect of the ETS that I like a lot is the automation of it. So because obviously investors can use these strategies on their own, right? But they'd have to be manually doing stuff and depositing and withdrawing and doing all these aspects themselves on almost pretty much a daily basis. Whereas ETS automates everything, right? Can you explain that a little bit?
Yeah, just like with all of our products, you just put in USDC, and then you do nothing. You just see the rebase grow. So you see your balance increase based on the profit once a day. You don't claim rewards. You don't need to sell it. You don't need to auto compound. It's all in one. You just put in stables, and you get your stables back. You just get more, and you know exactly how much you've earned. You go to your dashboard on our DApp. And you see how much profit your position generated every day. And you can just watch your balance grow. So this is really the easiest. Now, with sophisticated delta neutral strategies, actually you need to change your position quite often to minimize the impermanent loss. And so I think it's humanly not possible to do it yourself. In particular on UniV3. On UniV3, sometimes we can do maybe 30 rebalances per day, 50 rebalances per day, because your liquidity has to be very concentrated, but in the range close to the current price. So as soon as the price moves, you need to move. You need to move your range, and so if you don't do so, you stop getting yield, and you get all sorts of impermanent loss issues. Nobody in their sane mind is going to kind of change position and rebalance the portfolio 30 times a day manually. So that's why we have kind of scripts and bots which are constantly monitoring those positions and rebalance them and reposition them as the market changes. So that is actually, huge value add, ETS is bringing. If in case of USD Plus, you can kind of do all the investments yourself, and a lot of people will just look where USD Plus is investing, just invest in the same pools. with ETS, you cannot do that. With ETS, because of all these frequent rebalances and stuff like that, you have to be kind of more conservative. You just cannot move things yourself, and so it makes so much sense to join ETS instead of trying to yield farm those pairs yourself.
Yeah, for me, that's definitely one of the most impressive things for sure about how the ETS can rebalance everything for you, every 24 hours to make sure, that you're not affected by any of that stuff. Right, there's a guy on YouTube, Matthew. His question was, what about if ETH goes up? But I guess he was talking about your earlier example about maybe what the ETS can offer in return, maybe compared to yield farming when price is moving up.
Yeah, if you view that the crypto pair is moving up and you are sure about it and you want to bet on it, you should, ETS is not for you. The way I understood the question is that, ETS borrows ETH and then puts it into the yield farm. And so when ETH falls, the value of your debt falls, and that's why you kind of, end up neutral. Well, the same happens when ETH goes up. It goes up in the farm, but also the value of your debt goes up. So you stay neutral. There is some impermanent loss, which comes with that, and that's why we need to rebalance frequently enough, or infrequently enough too. So yeah, it's regardless whether it goes up or down, you kind of stay neutral. You're exposed to stables, so you stay delta neutral. That's why it's called delta neutral position, delta neutral strategy. You are just yield farming in a hedged way.
Yeah. So is what you mean by that? Because obviously we all know yield farming and permanent loss can happen. Obviously when a token's price crashes, but also when it goes up too fast, because when it goes up too fast, you actually also have an impermanent loss, whereas the value of that token isn't as much as if you were just holding it in your wallet separately. So what you're saying is the ETS also going to protect you against that?
It's not going to fully protect you, but it's going to minimize
it's going to be much better than if you were just holding your funds in a farm, right?
Yeah, why it will help? Because, impermanent loss is not linear. So the percentage you lose from to the impermanent loss grows with the price change. So the more the price change, the higher the percentage of your value that you lose to impermanent loss. Just a sec. But if you rebalance frequently enough, so imagine kind of the price moves 10%, then you have huge impermanent loss. But impermanent loss from the 1% move is not so huge as percentage. So when the price moves up by 10%, you can actually rebalance 10 times or 20 times. And this way, your losses from impermanent loss become much smaller. And that is why, and actually they're really small typically. So, and that is why, if you rebalance frequently enough, so that is why you still stay positive, because the yield from the yield farm itself is there to cover very large impermanent loss. But if you mitigate it with frequent rebalancing, then you kind of save it, and you can really earn more money. So this is really the magic of ETS. One thing, it's delta neutral, so it protects you from the price volatility. It has some gamma exposure, which is exposure to impermanent loss, but it mitigates it with these frequent rebalances of the position. It's pretty sophisticated finance stuff. Sorry, it's like all this yield farming is actually the closest to options trading in traditional finance, and that is pretty heavy in terms.
Yeah, for sure.
You know,
But I
making
mean,
money out of it.
I'm sure there is people that are interested in understanding exactly how it works. So, it's always good to explain. Um, yeah. So, as of right now, on your decentralized app, you can see that you guys are offering 4 different strategies at the moment. 2 of them on Polygon and 2 of them on the Binance Smart Chain. Will you guys be looking to expand on that in the near future?
Oh, there are more. You can actually go to ETS section. So you probably only looked at the featured, and those
Yeah, I
depend on the
did.
chain and stuff like that. But if you go to the ETS section, it has all the ETSs we have right now. There are 6 of them, and there are 2 prototypes. One of those prototypes is actually, a pretty solid prototype. So including our new products, which already have 40,000. Like we launched it less than 1 hour ago, it's already at 40,000. So I wonder how many users. So yeah, that is pretty already wide range. So typically, what we want to do on every chain we are on, we want to have like 3-4 ETSs, not a wide range, not too many, but like on Optimism we want to have 3. On Polygon we obviously want to have 3 or 4, and maybe 2 on Binance. So that's our goal. But we actually want each of those ETSs to be top performing. Like you see right now, ETS VMagic USDC is yielding 214%. 214%. That's crazy. When I just look at it, I just think it's crazy. It will not stay that much, but it's pretty crazy, I must say.
Yeah, for sure. So we've got a guy here who's got a question in the live stream. He is, I guess maybe he missed the start of the live stream because he's questioned what is the point of USD Plus. He's saying a lot of time since launch, and I don't see it growing against USDT. Now I don't know there if he's referring to the overall market cap or not. But yeah, I guess I don't get how that
Currently, our market cap is it's 8.5 million. Guys like CoinGecko do not always correctly reflect it, but at the moment we have 8.5 million of TVL. When we launched in May, we had less than 500,000. When we launched open beta, we never incentivized that TVL. It is all natural growth. It all grew by itself, with people because people realize that USDC pays you nothing, and USD Plus is exactly the same thing as USDC, but it pays you yield while you are keeping it. So it's infinitely better than USDC. It's the same as USDC, but it pays you yield. So it's infinitely more than the zero you are getting from USDC. And also it pays you yield in liquidity pools. And it also has a lot of use cases because it pays you yield in liquidity pools. Why it makes so much sense, not only for individuals, but for treasuries. So I think, what we see now is that people do realize the value. It has grown tremendously. It has grown like 17 times since launch in May. All this in the background of the UST crash, of what happened in June, July, with 3 Arrows bankruptcy, and ETH going down from 4,000 to 1,300. So with all this negative background, we have grown 17 times. So I think there is something good about our product.
Yeah, well, he did correct his question there, and he said no, it's about the price ratio of USD Plus to USDT. He said Sphere uses USD Plus in its liquidity pool and claimed it as ever appreciating, but I just don't really see it. I guess, firstly, my response to that before you go ahead and answer was that you need to maybe buy some USD Plus, hold it in your wallet, and you will see every day that it rebases and you earn more USD Plus. So it is ever appreciating. It rebases once per day, right, Max?
Yeah, but I think you're referring to the USD Plus Sphere pool on Dystopia. and USD Plus is appreciating. And so the way it appreciates is that in this pool there is more and more USD Plus, because the rebase from the USD Plus in the pool stays in the pool. And what that leads to is that Sphere token starts costing more. Because if there is like 1,000 USD Plus against some amount of Sphere, that Sphere costs 1,000. As soon as that 1,000 USD Plus through rebase in the pool becomes 1,001, same amount of Sphere now costs 0.1% more. And then next day another 0.1%, then another 0.1%, then another 0.1%. So USD Plus in that Sphere pool is compounding, is growing. There is more of it, and through this kind of growth of USD Plus in the pool, it's putting appreciation pressure on Sphere. Now, Sphere fluctuates not only because of USD Plus. It goes up and down because of multiple effects, but the USD Plus in that pool is producing a depreciating effect every day since we launched, every day.
Yeah, I mean, just because a token is paired with a stablecoin, that doesn't mean that it has to constantly go up. Obviously, people are going to sell this token, then the price is going to go down, right? So,
yeah.
Yeah, okay. For the moment, that's it for the YouTube questions. So, before we did talk about the event that you guys have coming up, I know you said you didn't want to disclose too much, but is there anything you can tell us about it?
Our token generation event, yeah. I mean, we're still kind of looking at the market. It's subject to the market conditions and some of the negotiation with the current VCs we're undergoing. But we are thinking something about that end of November. Polygon, Optimism, or Binance, we still don't know. There are multiple options we're looking and studying on which chain to do it. LVP or IF4, kind of options which are being evaluated. So once we know for sure, we'll make the announcement. At the moment, that's about it I can tell. Just I suggest people stay tuned and kind of follow the Discord and follow our Twitter to watch the announcements and kind of follow those announcements. I know TGEs typically kind of raise a lot of interest because everyone wants to get in early. But at the moment, like end of November is about the time we're going to do that. But that might change because of the markets.
Okay, man. So yeah, that's pretty much it for my questions, and I can't see any more being asked on YouTube, so I think we might call it there for today. So thank you for coming on. I appreciate it. Hope you felt like you could explain your products as best as possible. And so once we finish this now, I will put all the links to Overnight Finance in the post after this. Now you guys can go check out. Can go check them out over there for yourselves.
Yeah, I really appreciate you inviting us, and really appreciate the community welcoming us here and asking all the questions. Thank you, everybody.
Yeah, no problem. All right, guys, I'm going to close it down now. I'll see you later. Bye.
Thanks. Bye.